Hey everyone, me Kevin here. So you've probably heard the headline news that the unemployment rate has dropped to 6%, down from 6.2%. We added 916,000 jobs in March. But what do we think that Jerome Powell thinks about these numbers? Do these numbers give Jerome Powell chest palpitations that, oh my gosh, maybe it is officially time to raise rates sooner? After all, if you look at the bond market, it's kind of what the bond market thinks. You look at the bond market, ooh, good old bond market, Mr. Bond Market, oh my goodness. Mr. Bond Market sent the 10-year Treasury yield up substantially, well, a good chunk, after the numbers came out. If you look at the 3-day here of the 10-year, you see that big spike. That's right when these jobless claims came out. Not jobless claims, the new unemployment data came out, which led the bond market to be excited. Wow, great, the economy is improving as expected. That's it. There's no way rates aren't going up. Let's assume rates are going up. Now, we didn't hit all-time highs. We did hit all-time highs earlier this week, where we hit a figure of around 1.76. For the 10-year Treasury yield. Remember, as we see these Treasury yields go up, we tend to get downward pressure on high beta stocks like Tesla or other tech stocks or energy and EV stocks. But anyway, what is this going to do to Jerome Powell? Is Jerome Powell going to go, golly, the market's right. The economy is just growing faster than we expected, and it's time to raise rates sooner? Well, there are three things that we can look at to try to understand what Jerome Powell is going to believe. And so here we go. Let's go ahead and pull up the report. And the three things that we're going to look at have to, well, I'll just go in order of them. We'll just make it nice and simple. The first thing we're going to look at is race. Yes, race. This is not to make race bait content. It is because it is true that race is something that Jerome Powell looks at. Jerome Powell was very happy that before the pandemic, minorities were, in his opinion, able to participate in the economy at a higher rate than any time previously. We had a very low unemployment rate of 3.5%. And finally, we were seeing the unemployment rate amongst minorities also trend towards that figure, implying that more minorities were able to participate in this recovery that we had since 2008. So that prior recovery between 2008 to 2020, that was something that Jerome Powell was very excited about. And it's also something that Jerome Powell has been very heavily focused on in this recovery. He is asking for not only stable prices as part of his dual mandate, the other part being maximum employment, but the second part about maximum employment is that, or if we zoom into max employment, we now know that Jerome Powell is not just saying, oh, we want the unemployment rate to be like 3.5% or whatever. It's that when he refers to max employment, he wants to see max employment amongst all races, all genders, and as much employment as possible in a way that is going to foster positive climate change. Yeah, that is another thing that they're now gearing towards. And all of these things, for all of these things to happen, just means interest rates at the Fed may stay lower longer. But let's look at this data to see if anything has changed. So first, racial data. Let's erase some of these things here a little bit because it gets a little too messy when I highlight all this stuff. I highlight a lot when I'm reading. Anyway, the unemployment rate for Asians rose to 6% in March, following a decline in the previous month. So actually, the unemployment rate got worse for Asians. For Hispanics, the unemployment rate edged down, which edged is small. So it barely went down to 7.9%. For whites, we're at 5.4% unemployment, and blacks are at 9.6%. And look at this key word here, folks, little changed. Changed little for black unemployment. That's bad. When we look at the actual race part of this unemployment report, it's not pretty. The people who won are white people. White people won. Whites are at 5.4%. And they didn't even tell us how much that changed, although we could look at prior reports, but it's not so important right now. What's more important is that the minority unemployment rate is substantially higher than the total unemployment rate. And this is something that Jerome Powell absolutely looks at when considering should we raise rates or not. So race, number one. Number two is what I call the actual total unemployment figure. This is something that Jerome Powell references a lot. So take a look at this. This chart shows us what the civilian labor force is and how many people are unemployed. So if we jump over here, I'm just going to point this out to you. This is the total labor force. This is the number of unemployed. And so what Jerome Powell likes to do is he goes to the top of this form and he looks at this right here. The total number of people not in the labor force who currently want a job. So they want to work, but they can't get a job, maybe because they're training or they're studying or they're getting their license, or for one reason or the other, they're not picked up by the unemployment statistics. We have 6.9 million people in that bucket, and that number is up 1.8 million since before the pandemic. So let's try to break this out. So we're going to draw these little lines here to break this out a little bit. So look what we got here. Of everybody who is counted by the unemployment report, which does not include the people who want a job but don't have a job, we're at 6% unemployment. That's the headline leading statistic that everybody talks about and cheers, right? But let's just include the extra 1.8 million people who want a job but don't have a job. So in order to do that, we're going to go over here, and all we're going to do is we're going to add 1 point, was it 1.6 or 1.8? 1.8 million. So we're going to add 1.8 million to this number and 1.8 million to this number, and then we're going to divide. And then we'll get an unemployment rate based on, that's obviously going to be higher, but how much higher is the interesting note. So let's go to 9, 7, 10. Let's do the little calculator here. There we go. 9, 7, 10 plus 1,800, which is 1.8 million. So we're going to do 11, 5, 10. And then we're going to do 160, 558 plus 1,800. 162,358, and now we're going to divide 11,510 divided by 162,358. Enter. 7.1%. So we actually have 7.1% solely unemployment by simply including the people who want a job but don't have a job and aren't included in the unemployment report, and I'm only including the 1.8 million people that have been added to this group since the pandemic, because it kind of gives us an idea of just including that extra pandemic damage, we're up another 1.1 percentage points. If we now include the full 6.8, let's redo the numbers here. And this is the stuff Jerome Powell looks at. Jerome Powell is not a headline. He's not a headline news kind of guy. He's a give me the nitty gritty kind of news kind of guy. That's a new word. Okay, anyway, 6.8. And add 6.8 over here. So let's do the same math again. 9,710 plus 6,800, which is 6.8 million. That's 16,510,000 people actually unemployed. Add 6,800 on top of 160,558. Because obviously if we're including them in the labor force, we have to actually include them in the labor force. 167,358. Okay, now we're going to divide 16,510 divided by 167,358 equals, we're actually at 9.9% unemployment if you consider those folks. That is not good. This is not an improvement. Like, the headline news might be like, oh yeah, things are fine. Everything's fine. Jerome Powell's going to raise rates. Really? Look at this. This is bad. This is not good. Okay, so race, not good. Total actual unemployment, not good. Not getting much better. This number was 10% last month. And I'm not sure if that was just rounding, but it's not improving that greatly. Okay, then the last thing is take a look at this. People like to chart in the media how many jobs are being added per sector, but one chart that we don't get often is how many jobs are still missing from certain sectors. And that's really easy to determine here. Take a look at this. Leisure and hospitality, still down 3.1 million since February 20th. We've got a local government education. I'm just going to look at the minuses here. Okay, look at this. Minus over 500,000, 270,000, 310,000. These are all education jobs that we've lost since the pandemic. Employment in construction is 182,000 below. Now, we have had employment in certain sectors like consulting and business and professional services actually go up. You see that here, the 37,000, 6,000, and 8,000. But that's nothing. Those are really small numbers. The biggest numbers are all signaling lots of pain since before the pandemic. Look at this. Employment in manufacturing, down 515,000. Employment in other services, down 396,000. Here, employment in social assistance, down 306,000 since Feb 2020. Wholesale trade, down 234,000. 381,000 jobs missing in retail trade. Financial activities down 87,000. This is not good. This is not good. Another thing to note here was there was also a section where they talk about part-time. This is sort of just a bonus here. Let's take a look here. Here, look at this. At the very bottom here. The number of persons employed part-time for economic reasons at 5.8 million changed little, but is 1.4 million higher than in Feb 2020. These are individuals who would have preferred full-time employment, were working part-time because their hours had been reduced or they were unable to find full-time jobs. Nothing in this report is good. Like, Jerome Powell is not going to read this report and go, that's it. The bond market's right. That's it. Raise rates. We're going to go higher in rates. This is not good. It's still very bad when you look at the overall details here. Like, you read the headline, it's like, yay, 6%, added 914,000 jobs. If you look at the detail, it still sucks. Now, hopefully it changes quickly, but remember, we have 3 big things that we have to change. Race, total number of people who want a job having a job, especially relative to before. That's the second thing. But then the third thing is the total net loss per sector. Those are the things, in my opinion, Jerome Powell is going to be looking at, and this report does not signal any needed change by the position of the Federal Reserve. So I am maintaining my belief that the Fed is not interested in raising rates anytime soon. And obviously something that could throw a wrench in this is seeing inflation, which CPI data comes out in about 2 weeks. So we'll take a look at CPI data when it comes out. But for now, we don't have an indication, at least from this unemployment report, that Jerome Powell is going to be freaking out and thinking about raising rates anytime soon. Anyway, hopefully that helps you look at these unemployment numbers a little bit more in depth. If you found this information helpful, consider subscribing. Check out the courses linked down below on building your wealth and learning perspective. And folks, we'll see you in the next one.